Hello and welcome to FinSights, interesting conversations with smart people. This series is brought to you by FinClear, the Australian financial services technology company. If you'd like to learn more from thought leaders in technology and finance, head to finclear.com.au.
So I'd like to introduce our first showcase with Tony Lynch, Chief Commercial Officer from FinClear. And a reminder that we have switched off the Q&A in this session, but you can ask any questions in their virtual booth. Hi Tony, thanks for joining us today. How are you?
Very good, Sarah. Thanks for having me.
Great. And so to start off, why don't you tell us a little bit more about FinClear and what you guys do and perhaps some of the trends you've been observing in the market as well?
Sure. So FinClear is a wholesale stockbroking and technology firm. So when you say wholesale, it means we don't deal direct to the public or for retail. We deal with financial advisors, stockbrokers, fund managers, fintechs, and basically allow them access to equity markets and give them technology to help their clients to manage their business. So if anyone wants to buy or sell an equity, that's effectively what we do. In terms of trends, what I was going to talk about today is what people have been calling the Robin Hood phenomenon, which is this change in investor behaviour we've seen during the COVID period, where there's been a massive increase in retail investors, people going to the market, buying and selling equities directly rather than through advisors or through managed funds.
And do you think the pandemic has driven that trend, that was already there, or has it actually created something new?
Yeah, there's a few ways. Look, I think it's too early for us to know exactly what it is, but there's probably three things it could be. It could be structural. I mean, we're in an unprecedented era of low interest rates. There's a search for yield, low wage growth, people looking for more ways to earn revenue. So it could be structural. We probably don't know yet. It could be generational. We've had a whole lot of issues in financial services with trust and scandals and so forth. So there's an argument which says, well, young people are just taking it into their own hands and investing directly rather than going through intermediaries. Or it could be temporary. It could be a blip. I mean, there's some good stories out there. There is evidence which says that there are people withdrawing $10,000 from their super and they're investing it in the stock market. Or the other one, which I quite like, is because there was no sport and no sports betting, people used the market instead.
Yes, everyone finding ways to entertain themselves at home, I guess.
Yeah.
So in terms of equity trading, what is the attraction there? Is it sort of, a boredom thing, or, what do you think is driving people to do more equity trading?
I think that there's a couple of things. One is it's immediate. It's relatively immediate. You can see what happens. You can see movements. It's live TV, effectively. It's also in your own name. You can see a dollar amount in your name on a screen, which goes up or sadly down sometimes, which attracts people. And as I say, the other one is, of course, that people can buy what they consume, which I think is quite a big trend. If people they go to the shop and they use Afterpay, they go, I really like Afterpay, I'm going to buy the stock.
That's true.
Yeah.
I guess, quite a sort of element of, being able to buy into those brands that you know. Tell us a bit more about this Robin Hood model. Do you think that we'll see more of that come here into the Australian market?
Yeah, so look, just as background, Robin Hood is a large US fintech which offers free trading. We could talk later about whether any trading is actually free, but the headline trading is free. And that's obviously attracted a lot of interest in the US. I mean, the stats are huge. In June, they did 4.3 million trades a day, which is massive compared to Australia. That's absolutely huge. So they've made a really big impact. So the Robin Hood phenomenon is now about other people in other territories and other parts of the world doing exactly that. In terms of, in Australia, it is slightly different. It's not zero, but it's getting cheaper. You kind of started with CommSec is still the biggest player at about $20 a trade. There are other entrants coming in. There's a firm called Think Markets, which is launching with FinClear next week using our API stack. They will be considerably cheaper than that. There's been press about Zinja Bank, maybe the other neobanks doing it. Some of the global fintechs like Revolut and eToro have talked about it. They're in Australia, not doing share trading yet. Some of them doing US, some of them Australian. So there's not free trading here yet, but it's getting a lot cheaper.
And in terms of this sort of flight towards, equity trading, does this speak to sort of a lack of available advice on the market, or, I guess whether advice is seen as sort of accessible to the mainstream?
I think you've hit the nail on the head. It's the accessibility thing seems to be the issue. Like there is a background issue, as we know, Royal Commission trust, people not trust. And it's not just advisors. It's unfair to single advisors out. It's financial services as a whole. It's banks. It's insurance companies. It's everybody. So there's that. But there's also in the stats that show this. I think there are about 2 million people in Australia that get advice, and another 2 million who want advice, but they can't get it in the way that they want it or for the price that they want it. So there's a challenge for advisors in trying to say, how can I deliver it differently? You know, how can I make it simpler? You know, some of the stuff we do at FinClear around direct listed equities, using ETFs more, I think that trend's going to continue as well.
And what do you think the takeaways are from, you know, for advisors in terms of these sorts of trends? Do they need to start looking at sort of incorporating these sort of low-cost trading offerings into their business a bit more?
I think so. I mean, what we're seeing a lot of, I do this myself, you know, I think in the past people were happy to outsource and go, you know what, I'm going to give everything to this fund manager because I think they'll do a really good job. Whereas now people are learning a bit more about fees and a bit more about what the impact of fees on their future investment value is. And they're looking at things and going, well, actually, I don't need a manager to beat the market or to match the market, which most of them I do, because I can do it in ETF and it's so much cheaper. There's also, like, ASX has changed dramatically over the last few years in that you can now get so many different diversified products on ASX that you couldn't before. So there's an argument now which says you can just use ASX to have a diversified portfolio. You don't need unlisted products.
Right, that makes sense. Well, that's all we have time for today's session. Thanks so much, Tony, for joining us.
Thanks, Sarah. Much appreciated.
And if you have any questions about what was discussed in this chat, you can find Tony at the FinClear virtual exhibition booth. Now let's head back to the timeline to see the next two sessions from Midwinter and ETF Securities.